Well, today, hot story on the tip of every investor's tongue was the major sell-off in gold. CNBC's own Josh Lipton joins us now with the details. Good evening, Josh.
Major commodity markets falling hard today. Gold breaking below $1,500 for the first time since July 2011, entering a bear market. Traders talking about deflation fears. Also reports of Cyprus selling its gold. Capitulation in the GLD, the gold ETF, trading at almost 5 times its average volume. That, along with margin calls, fueling the fire. Miners also taking a hit. Names like Newmont Mining and Barrick Gold, both deep in the red. Now, as for oil, the black gold also dropping, falling to a 9-month low. Concern about a weak global demand outlook. U.S. retail sales fell in March. Remember, this week, the International Energy Agency also cut its global oil demand growth estimate for this year by 25,000 barrels per day. Larry, back to you.
All right, many thanks, CNBC's Josh Lipton. So, what's driving this commodity sell-off? All right, couple points. First, there is no end of the world, all right, gold, no end of the world gold trade. Second, there is no end of the dollar gold trade. Third, there's no inflation. Fourth, maybe Cyprus and Egypt and some of the Euro central banks are selling gold. Maybe. We don't know that yet. But how about this thought? A hat tip to my pal Dave Goldman. U.S. energy independence from Saudi Arabia and elsewhere ends our trade deficit over time, boosts King Dollar, and winds up crushing gold. All right? Let's bring in Jim Iuorio, knows a thing too about it. He's director at TJM Institutional Services. And we have Jared Bernstein, CNBC contributor. All right, Jim Iuorio, you heard some of my thoughts. What's your take?
I like most of your thoughts. I think, and by the way, today this move puzzled a lot of very intelligent people that I talked to today. But by the end of the day, it seemed like the consensus with this, and this is what I believe, is that gold has obviously been trading very, very heavy, based mainly on the strength in the dollar, probably a lot of it caused by yen. Plus, you know, we're talking about 9 years of speculative positions building up. The weakness, selling tends to beget selling. Remember what happened in Apple in fall? They started selling Apple because for tax reasons. But after that happened for a couple months, people who had no interest in selling it for tax reasons were like, wow, my holdings in Apple are going down. I better get in before this gets too painful. We're at that point in gold now. We broke through some old levels, which was about 15.25 in the gold, and that brings in a bunch of selling, and that was the velocity of the move.
All right, Larry Glazer, we found you. Jared's going to stay with us, too. But Larry Glazer, one reality in this whole story, you got to go back about a year, 18 months. Gold has really been falling quite a while in fits and starts. In round numbers, $1,900 to $1,500 below. One point I want to make is there's no end to the world. There's no end to the United States. There's no end to the U.S. dollar. And if anything, the American stock market rising has knocked gold down. What's your take?
Of issues that are going to keep me awake this weekend, and the sell-off in gold is not going to be one of them. I mean, when I look, gold is a source of funds right now to fuel other asset classes. It is in redemption. That's not necessarily a bad thing. In fact, that's probably a bullish thing. When I look, I see gold, it's a safe haven, it's a hedge against inflation, it's a hedge against financial calamity. When it drops, it tells you neither of those is apparent right now. You know, gold, it's an insurance policy, right? And when we look, we want our insurance policy to decline. We want it to expire worthless. What worries me is certainly not going to be gold. It's going to be the decline in interest rates or the decline in energy that we saw today. It's definitely not going to be the decline in gold, which is a bullish indicator going forward.
Let me go to Jared, because I think it's interesting, Jared. I think a rising economy hurts gold. Right. I think a pretty strong currency hurts gold. I think a low inflation rate hurts gold. I mean, in some sense, I'm going to go to Ben Bernanke. I don't know about the Obama. You want to argue Obama, go ahead. But to some extent, the drop in gold justifies Bernanke's policies at the Fed.
I think so, and I think the reasons that you and the others have ticked off really are the universe of reasons why we saw this drop off today. In fact, I'm a little surprised hearing them from you, because I always thought you were more of a little gold bugger. And
No, I'm a gold-backed dollar.
Yeah.
But I hated it when gold shot up to nearly 2,000. I hated it.
And in your list of reasons, 3 impressed me the most. One is the world's not coming to an end, so the hedge that we were just talking about isn't as important. The inflation situation is what it is, and it doesn't seem much pressure there. And then equities. I mean, you know, if you're in gold as opposed to equities right now, you're kind of getting slammed.
Just getting slammed. Jim Iuorio, I want to go back to this other argument, which was given to me today by my pal David Goldman. I want to give him the argument. We are going to become energy independent in the next 10 years from Saudi Arabia and all the rest. That means a bunch of things, okay? It means our